let's look at small caps. First off, read this disclaimer carefully. And remember to like, sub, share, and comment. Okay, we will go into the more leveraged business in this video. So we go here, and you can see that we have this one. If you are very bullish on the small caps, 513% from the 52-week lows. A pretty decent move. If you are feeling more bearish, there is this one, only 3% from the lows. Okay. The underlying ETF for the small caps is the Russell 2000 ETF, IWM. The TNA is for bulls, 3 times leverage, and the TZA is for bears. If we look at the seasonality of the small caps, then you can see that December is one of the stronger months. However, January is, when we take all of these years into account, includes bull markets and bear markets, January is the weakest month. That's quite relevant. And there's some very clear and smooth seasonality here in small caps. So let's now look at the charts. Let's, look at the Giga picture here for this ETF. Clearly, during bear markets, it goes down significantly. That is to be expected with the small caps. If we measure the fall here during the financial crisis, you can see that, minus 62% is certainly a big bear market. Here you have the most recent development, and the key thing here about the small caps is that they are quite volatile even during a bull market. You see that here we have a pretty sizable pullback, minus 30%. Here we have another pullback of a whopping minus 27%. And from the textbook definition of a bear market, you could make some case that these were bear markets for the small caps within a macro bull market. So that is quite relevant. So we know, based on all the history we have here for the small caps, is that they can move up very big, but they also have a strong tendency to go down big. When we look at all of this history, this rally here is quite sharp. In the past, it's been more modest. And that also, is apparent if we zoom in. So this isn't, simply just a distortion. So here we zoom in. You can clearly see the usual rhythm, how sharp the rallies are and how sharp the pullbacks are and how frequent the cycles are. Meaning, how frequent does it go up and down? And it is up and down very frequently. Here you see this absolutely euphoric rally. We are way above these previous support levels. You see here that in the past, the 20, 50, 100, even occasionally the 200-week moving average is support levels. The 20 especially is very commonly a support level. You see that it is very frequent for us to test it. That is the natural rhythm of the small caps. Here, we are way above that support level. Hence, this recent development, even though it is bullish, the bulls are in control, this is an anomaly. Looking at RSI as well, you do see that we do have some very elevated levels. Okay, you can see that there's a let's say 50% correlation with the S&P 500 long term. Looking here at the daily data points, we do get a 95-ish% correlation. That's rather strong. If you look here at the RSI, you can see that when we look at multiple years, we can go way back in time. You see that we usually stay within the RSI zone. We don't like to be overbought or oversold. Hence, based on that history, the most recent development is it's risky for bulls. The accumulation distribution, however, is corroborating the most recent rally. So there is certainly buyers here stepping in. Okay. Let's now do some correlation studies of these leveraged products. So take the IWM here in the background, like that. Get TNA. The TNA is very good if you are feeling bullish. You can see here that long term there's a 72% positive correlation here with the underlying index. That is actually pretty decent. That's good. If we go here to the short time frame, we do have a 99% positive correlation. That is really good. That's very, very good. So the leveraged product, it is doing what it is supposed to do, you know, tracking the underlying index. So that's great. But based on the analysis we did, there was some reason to maybe feel that there could be some pullback on the horizon. In that instance, the bearish leveraged product would be more beneficial for a shorter term trade. Here we see that long term there's a minus 44% negative correlation. Ideally, we would want to see it very high, like minus 100% would be the perfect score. Hence, there certainly is divergence long term. When we look here at the daily data points, we do have a 93% negative correlation. It is strong. It is a good. It is a decent correlation. I would even say that it is good. It certainly could be better, but when the small cap ETF, the IWM, goes down, that usually will lead to a rally here in this leveraged bearish product. Yeah, so yeah, that's basically the correlations. It's very important to do these studies, especially when you get into these kinds of, you know, leveraged products, because they do have a nasty tendency to diverge from the underlying index. Here we got Finviz. They draw these trend lines, and you can see that we are way above the trend channel. We stay within, we blow out. The most recent rally is simply just very excessive. Well, there is actually a technical indicator that is very good for measuring these things. I mean, we have looked at our RSI, but we can look at the Bollinger Bands as well. And when we look here at the Bollinger Bands, you can see that it is rare for us to push, you know, hard towards, you know, the upper limits of that band. Okay. Hence, to sum up my take here on the small caps, the bulls are definitively in control. However, when it comes to letting the trend be our friend, we need to also look at the bigger picture. The bigger picture here for the small caps is that it's gone up a lot in an abnormal way. So there is definitively euphoria, great excess. And based on all the history we had, and also looking at the seasonality, there's very good reason to suspect a pullback is on the horizon for the small caps. That is a completely normal thing, and it is the thing that the small caps have been doing for the history we looked at. So the primary trend is pullback is to be expected, and what is currently happening here are euphoric bulls fighting that primary trend. So that's just very important. Always look at the bigger picture, so to sort of do like almost like a psychoanalysis of the security in question. Whatever you do, of course, it is best to have a market neutral portfolio.